Welcome to the deep dive. Today, we're tackling a really significant shift happening in digital finance.
Right.
It's the U.S. Senate's recent progress on stablecoin legislation.
Yeah, things are definitely moving there.
Our main focus is going to be on understanding the Genius Act. That's the Global Economic National Innovation in U.S. Stablecoin Act. Bit of a mouthful.
It is, yeah.
Think of this as your sort of shortcut to understanding why this matters for stablecoins and really the bigger financial picture, too.
Exactly. Now, just quickly, for anyone maybe newer to this, stablecoins are basically cryptocurrencies, but they're designed to hold a steady value, usually by being linked or pegged to something stable like the U.S. dollar. You've probably heard of USDC, maybe Tether.
Right. Those are the big ones.
Yeah. And right now, they're absolutely central to, how crypto trading works, and also pretty big in DeFi, that's decentralized finance.
So like financial stuff outside the usual banks built on blockchain.
Precisely.
Okay, so here's something to think about right off the bat. How might these new rules eventually change how you handle digital money and maybe interact with the wider economy? Let's get into the Genius Act itself. What's its main goal? What's it trying to do?
Well, at its heart, the Genius Act is really about creating a clear, consistent set of regulations for the companies issuing stablecoins.
Okay.
It's about moving from what's been a pretty uncertain landscape to one with, let's say, defined rules of the road.
That makes sense. So let's dig into the specifics then. What are the key things lawmakers are focusing on here? What are the sort of crucial elements?
Well, number one, a primary concern is making sure consumers are protected.
Right.
So setting up rules and safeguards for people who actually use or hold these stablecoins.
Okay.
Another really big piece is mandating reserves for the companies, the issuers.
Ah, the reserves. Why is that so important?
Well, think about it like funds in a bank backing deposits. These reserves, these backing assets, are absolutely essential for maintaining that stable value.
Right, so the dollar peg actually means something.
Exactly. It prevents a kind of sudden collapse in confidence, keeps things stable.
That makes perfect sense. So it's about making sure there's actually something solid backing up the digital coin.
Yeah.
And this focus on stability, on consumer protection, it seemed to be getting support from both sides, right? The bipartisan aspect.
Yeah, the bipartisan support is actually a pretty big deal. It signals, a growing agreement among lawmakers, whatever their party, that regulating stablecoins is just a necessary step forward. It suggests there's a shared understanding of both the potential upsides and, frankly, the potential risks.
And we've definitely seen years of questions, uncertainty around crypto regulation in the U.S., so this feels like, well, a real turning point, perhaps.
Absolutely. I think this progress could really open the door for stablecoins to move beyond just crypto trading and DeFi.
You mean like everyday payments?
Right. Potentially, yeah. Becoming a much more common way for people to make payments.
Yeah.
If you connect this to the bigger picture, these clearer rules, greater stability, that could build public trust and really encourage wider use.
And how's the industry reacting? It sounds like they might see this positively, like a sign of maturity.
Generally, yes.
Yeah.
Industry leaders seem to view this legislative effort as a very encouraging signal.
Okay.
They seem to believe it'll build more trust in the crypto space overall and help it become, a more integrated part of the U.S. economy eventually.
Which I suppose could then attract more serious money into the crypto world. We're talking institutional investors.
Precisely. With less regulatory fog, less ambiguity, we could very well see more significant investments coming in from institutions.
Right.
Which would further legitimize and probably grow the market quite a bit.
All right, so just to quickly wrap up then, our deep dive into the Genius Act shows it's a significant move by the U.S. Senate.
Yep.
They're aiming to regulate stablecoins. The main things are consumer protection, requiring reserves for stability, and bringing these under federal oversight.
Key pillars, yeah.
And this bipartisan effort suggests they could become more mainstream, maybe attract more big investors.
And this development, it really does have the potential to influence how you might handle digital payments, how you interact with the financial system later on.
Yeah, it's not just abstract stuff.
Not at all. It could have real, tangible impacts on your financial life down the road.
So maybe one final thought to leave you with. With clearer rules for stablecoins potentially coming, what new possibilities might they unlock? For our daily transactions, for financial innovation, and I guess what challenges or hurdles might still be out there as this whole landscape keeps evolving?
Good questions to ponder.
Definitely something to consider. Join us next time for another deep dive.